Hello, welcome back with this video in which we're going to talk about SOFI. And the stock has soared after the company gained approval for basically becoming a bank. And as you can see here, it's a major step forward for a bank that started as a SPAC. And in case you don't know what a SPAC is, I have made a video about it, and you can find it in the description below, and you watch it later after you're done with this one. So obviously, a bank charter, a company becoming a bank, could help SOFI lower its cost of capital and boost earnings. It all makes sense. And when the approvals are done and the company officially becomes a bank, that's going to be a very, very massive milestone for it. And it makes sense that the SOFI stock is soaring at this current time. And the other interesting thing that I wanted to mention is that SOFI can launch a bank, but it cannot do any crypto. Would be nice if they could, but they can't. They can't touch crypto yet, and so they can be a student loan and financial provider, but just not engage in crypto assets. And the very, very interesting thing as well is that SOFI overtakes GameStop as Wall Street Bet's most talked about stock after getting the go-ahead to launch a bank. And I felt that this is interesting to add just because a lot of you are interested in potentially trading the stock, and you may want to just take a look at the trends, and it's important to see what's happening in very well-known boards like Wall Street Bets is, because that kind of showcases the hype that exists around the stock or any other financial instrument. But now let's go ahead and take a look at the financials of the company. And you'll see here that I have my trading platform, my financial analysis platform. It's not really trading, but before I actually show you this one, this graph over here, let me just take a quick look at the income statement of the company. And you will see here something that I really like seeing: the fact that the company is enjoying very, very substantial growth over here. So the last 12 months, like 90% and 108% for the gross profit, and that's awesome to see. And important to see that because after the bank enters a new era where it's going to be a bank as well, officially, you would potentially expect this growth to actually continue. So I like to see that. And you cannot really take a look at the cash flow, and I have talked about it in previous videos, like the one that I made about Goldman Sachs, because the company is a debt company, is a company that's lending money to people, so it's gonna have a lot of red here. So you would expect that. What you do like to take a look at is the balance sheet. So see the total assets of the company, they are growing, the total equity over here, which it is growing, and that's a very, very good sign, and actually growing pretty rapidly here. So the thing now, we should kind of and should use what I have used in a previous video as well. Actually, it has removed that. So I'm basically adding the historical price graph here, so you can see the price of the company and the book value over here, the book value per share. No, sorry, that's the price to book that I wanted to add, the price to book, and I'm just joining the two. And you will see here that we're having a graph that includes the price chart and the price to book ratio in this purplish color. And what we want to see and what we want to examine is basically the cases where the price was actually lower than the book value. And generally speaking, we want as low of a book value as possible. So a low and a good book value is generally speaking something that's 1 and below. And that's because it's a ratio between the assets of the company and the current price of the company. And so price per share, that is, and assets per share. And so when we have a 1 over here or anything below 1, we're having an undervalued company because it has more assets than the current stock price, the current valuation. So right now it's at 2.3x over here as a multiple. So you're basically paying $2.3 per $1 of assets of the company. That's what that means really. And obviously you want to be getting at as much of a lower price as possible. And now it's actually a little bit more because the stock is actually a little bit higher today, but you get the idea. Maybe it's like 2.4 or something. It's probably over here. It would be over here, so it's 2.6 right now. And what you could do is actually examine that and compare it to other companies, other financial companies like JP Morgan, for instance. And so if you take a look at JP Morgan, this is currently at 1.7x, as you can see here. And if you take a look at Goldman Sachs, for instance, Goldman Sachs over here, you will see that it is at 1.4x. So Goldman Sachs is the cheapest of the three in terms of the assets again. The thing is, the other thing that matters a lot is growth, and I really like the growth that SOFI is enjoying right now, plus the fact that it's a new bank, and so it's gonna have much more leverage now, and potentially even higher growth, and it's gonna be easier for them to to traverse lending, generally speaking, and they're becoming a bigger name really. And so I like to see that. So for this alone, I would be, I would myself potentially think about investing a little bit into SOFI, and let it run for a few years, see how that fares along with the stock market really. And I think it's gonna do well, frankly. Now, if I'm getting it at this price level, and we can actually go back a little bit at SOFI, take a look at the company, the price to book. If I get it today at 2.7, which is the current price, if I buy it basically just now, I will be getting a 2.7, about a 2.7, 2.6 to 2.7 multiple. And that is a little bit steep, but again, there is a little bit of growth, and I should expect that the company will continue at this path and eventually even lower this price to book ratio as time goes by. Now the thing is, this is a very new company, and I don't have a lot of financial data really to examine. As you can see here, you can kinda take a look at the income statements and all that. But the mere fact that the company is actually becoming a bank right now, it's gonna signal a completely different era for its operations, and so I would potentially even treat it as a new company really. And don't forget that this was a SPAC as well, so I still need some extra proof from them to know how well they will be doing. But I do like what I'm seeing here, and I could see myself investing just a little bit in SOFI for sure. And yes, it is a little bit of a riskier investment, but it could potentially yield some nice returns. And I wouldn't be surprised at all if the company actually doubles its stock price relatively soon. I really wouldn't be surprised at all seeing that. So yeah, this is a potentially interesting company to invest in. Would I buy here? I think I would. I think I would add a little bit. Again, knowing and understanding that it is a riskier play than normal, I still would add a little bit, and I do like the fact that it has been down a lot. So it has lost a lot of its value, so there is a little bit of a leeway. And so yes, I would buy SOFI today, add a little bit to my portfolio. And hope you enjoyed the video, and please like and subscribe if you subscribe to the channel if you did. And in the meantime, you can also take a look at this video that I made, in which I'm explaining what a SPAC is, using DWAC for the explanation, the company that was actually an SPAC. So thank you for watching, and I'll see you in the next one. Bye bye.